Demola Sogunle, Chief Executive of Stanbic IBTC Holdings, joins me now. We do have those numbers out now, so he'll be joining us to talk about those numbers and, of course, outlook for the banking industry. Demola, thank you for taking the time out to join us today.
Good afternoon. Thank you.
Let's get right to the numbers. Starting with the group's gross earnings, it's up 7.8% at 126.5 billion. Profit after tax also up 24.7%. I must say that these numbers aren't too shabby at all, given what we've experienced so far, especially that tight regulatory environment and, of course, the COVID pandemic. Would you say, I mean, looking at these numbers, and of course, on the back of all that has been happening or has happened so far this year, are these numbers in line with your expectations?
Thank you very much. Likely in line with our expectations. Our gross earnings grew by almost 8% year on year. And we were able to also see, non-interest revenue, being the driver of that figure. Non-interest revenue grew by about 27%. And a component of that is our trading income, which grew by almost 90-something% year on year, because we were able to position in such a way that we were able to take, advantage of some of the volatilities, within, the yield space. Thank you.
We'll talk more about the operating environment, but I couldn't help noticing your interim dividend coming with these numbers. 40 kobo interim dividend will be going to investors. Now, we know that central bank governors in other countries, especially in the West, have advised banks in those countries to embark on or to maintain capital retention. The CBN here has been silent on it, and I'm just wondering, I mean, given all that's happened, some might argue that capital retention may have been the wise thing to do. So I'm just wondering the rationale and the thought behind earnings interim dividend at this time.
Thank you very much. Very vital question. I mean, under normal client, you want a situation whereby a financial institution is well capitalized. The important thing is that we are well capitalized. That's number one. And one of the things you want to look out for is our capital adequacy ratio is above 20%, is more than twice the required level, which is very important. The other thing is the fact that when you look at it, I mean, we've been able to deliver, what you can call, reasonable, modest, first half results. So we felt that given everything that has happened, we should be able to compensate, the shareholders, by being able, to give them, interim dividend. However, the regulators, they are also well concerned about the fact that, operators should be able to conserve capital. The important thing is that we are well capitalized and we are above, all the prudential, ratios. Thank you.
Now, going forward, outlook for earnings, we understand that the tight regulatory environment will continue to weigh on banks' earnings, or margins, and profitability going into the rest of the year. What are your thoughts in terms of how the operating environment is going to play out? Are we going to see more of the same? I know that there are, still issues around FX. We still do not have a full picture of the impact the virus would have had on the economy at year end, where, of course, we're expecting to see lower GDP numbers for the next GDP data that could take us into a recession. So just share your thoughts on how all of these dynamics play together and how it could also impact on your operating environment.
Thank you. Look, the economy is opening up, especially, given the fact that federal government, had already issued, instructions, for the lockdown, to be eased, which is very important. Commercial activities are meant to go to top gear. Business activities are also meant to go to top gear. However, the important thing is that we need to bear in mind that the full impact of COVID-19 pandemic and the shutdown, we will feel it, within, let's say the corporate, books, customers and the rest of it in Q3 and in Q4. Of course, we still expect, that a single interest rate regime will prevail, given all the efforts that central bank had put into that in terms of trying to encourage, lending and to make sure that, cost of funds, for manufacturers and for users of funds are still very, very cheap. That is very, very important. And of course, we expect that, look, in the next couple of weeks, liquidity in the FX market should improve because of, some of the good signals that we received in the last, I would say in the last couple of days. Thank you.
I was going to talk about the effect, the naira now. I'm glad you brought that up. Now, we know that the currency has taken a major punch to the gut this year as the CBN tries to, struggles to harmonize all the exchange rate windows. But with this latest intervention, supply and demand dynamics, do you think that what is your outlook for the naira going forward? Do you think that the currency could come out of the woods?
I mean, look, the important thing is that on one hand, with the harmonization of different subsets of the FX market, a depreciation had already taken place even before now. From 305 or 306, we've seen movement to about 380, 385. So that is very, very important. And the other thing is that we believe that, look, between now and the end of the year, we will see let's say an appreciation in the parallel market. You notice that even before, 2-3 days ago, parallel market was doing something like, 480 naira to $1. Simple announcement from the regulators regarding the commencement of FX sales, either to BGC and also actual implementation of trying to, restart the sales of I and E window dollars. Had already seen, almost 10-15% appreciation in the parallel market. So we believe that between now and the end of the year, we don't see too much depreciation in the currency beyond the existing level.